What is going on, investors? Hopefully you guys are doing well out there. That is right. It is Friday. It's time to celebrate because the weekend is here, and so is the FAANG Stock Recap Show here on the Investor Channel, where every Friday we recap all the major news and the technical chart patterns from all the major FAANG stocks, including Microsoft and Tesla. And we had big declines this week in Amazon, Tesla, and Apple, among other stocks. And we've got a lot of news to get to. So we'll kick things off like we always do with Meta Platforms. Start of the week closer to $97 per share. End of the week down 6.8% to $90.79 per share. This is after the stock initially got a bump earlier in the week after an FCC member urged that TikTok actually get banned here in the United States. Now, the FCC is made up of both Democrats and Republicans. It appears that the Republicans are in the minority on this FCC group in Washington. And so I don't know how much his opinion will sway the other members, or if this is something that broadly the committee or the commission is kind of looking into. But obviously you get a ban on TikTok certainly would be very beneficial to the Facebooks and the Googles out there. Virtually any online advertiser would see a massive bump. I am just not sure how this would be implemented, how it would be carried out, and the political will to actually get something like this done, because obviously this is something that really impacts the voters, since a lot of voters will be users, particularly younger people will be users of TikTok, and then they might view whatever political party gets blamed for banning TikTok, they might get blamed for that politically. So I don't know if this is something that picks up steam after the election, after all the votes are counted, or if this is just kind of smoke and mirrors. We'll certainly keep an eye on it, because any kind of ban or any kind of restriction even on TikTok, some kind of restriction or a forced change of ownership of the US business, certainly I think would be beneficial for Meta in the longer run. Now, Meta's India head exits the company and will reportedly lead the region for Snapchat. So we're actually seeing people leave Meta for Snapchat, which again is inferior to Meta, both on a user basis, but also a revenue and even profit basis. It's surprising to me that people would leave Meta for Snapchat, but it could just be indicative of the culture chain over at Meta, where people are seeing that Mark Zuckerberg has his attention on this metaverse and not necessarily the core business. So they want to go work on a core business over at Snapchat. Now, this week was interesting because you obviously had Twitter start its Elon Musk era, and the company is planning a new hefty subscription program where they're going to charge reportedly users maybe $8 to $10 a month in order to have a little blue check mark by your name, among other features. Now, I don't necessarily think what Twitter does is going to directly impact or take dollars away from Meta, but it could create a new blueprint for these companies. I tell you what, if Elon Musk proves that he's able to charge users, certainly a certain percentage of them, $8 to $10 a month for a blue check mark, well, guess what they're going to start doing over at Instagram, maybe even here on YouTube. They hand these things out for free or after you reach some kind of status. But if they can start charging you $5 to $10 a month for these types of things, well, all of a sudden that's a new business model for these companies, and I actually think it's probably going to work. Now, moving on to Apple, start of the week at 153, end of the week down 9.6%, basically giving all its gains back that it saw after its earnings week. End of the week closer to $138 per share. This is after the iPhone maker saw its big, gigantic Chinese manufacturing facility get put on lockdown. That obviously has investors concerned and worried if the supply of iPhones will get frozen out of China. Now, the company is battling back a little bit. They're adding a new iPhone manufacturing partner in India as it's continuing to shift from China. I think we do a story on this almost every other week, how they're making AirPods and how they're making certain types of phones over in India. And it appears that the manufacturing hub over in India is getting larger and larger. We'll see how this impacts the kind of the gross margins and certainly the revenues and the profits over at Apple in subsequent quarters. But even if it impacts margins to a certain degree, maybe it's like 0.5% or maybe even a full percent on those margins, it does give us a little bit more margin for safety when all of your chips comes from Taiwan, which obviously gives you a little bit of China risk to a certain degree, but obviously all your products are manufactured, most of them are manufactured in one country. If we can diversify with Apple in terms of its supply chain, well, I actually think investors will give them a pass when it comes to maybe lower profit margins. Now, Apple is now worth more than Alphabet Amazon and Meta combined. I can't believe I'm saying that. I don't know if this means Apple is just so wildly overvalued or if it means Google, Amazon, and Meta have become so undervalued that those are the stocks to pick up. Just from my own perspective as an investor, Meta, Amazon, and Alphabet have been the only stocks that I've added this year. I have not added to my Apple position. I actually think this is a great opportunity for the other three companies to have outperforming years in subsequent years. Moving on to Amazon, start of the week at 103. This one just kept sliding down a ski slope, down over 12%, finished the week close to $91 per share. This is after the company announced another pause on corporate hiring amid that economic certainty. If you watched our Amazon earnings video, it was a kind of a disaster. Okay, their e-com business is basically not making any money. Their AWS business segment, which I saw rumors as well, that they're starting to pause hiring there, basically pausing hiring across the board over at Amazon. This is a company that needs to start pulling things back in terms of its headcount, of its salaries, of its expenses, and start at the very least start churning out some profits. I'm not asking this company to slow down its investment, but I think we've invested maybe a little bit too much with Amazon, and it's time to pull the reins back and print a few more profits when those quarterly earnings come out. Now, Walmart is taking aim at Amazon with a half-off special on its subscription service. Walmart Plus now $49. That was basically through yesterday, so if you wanted to sign up for this, sorry about that. But my guess, this is actually more indicative of what's going on at Walmart and not necessarily what is going on at Amazon. I don't think if these were flying off, these Walmart Plus subscriptions were flying off the shelf, I don't think you cut the price in half for 3 days. I think that what this is actually showing you, and we saw evidence of this, the subscription business at Amazon is growing in line with what you'd expect. In fact, I think there was a small acceleration. And during these times, even though we're a little bit disappointed with Amazon's profit printing, it certainly is putting pressure on the Walmarts out there where they're having to cut the price of their subscription model in half for at least a couple of days. Now, Amazon lost its $1 trillion market cap as it swung down over 12% this week. I'm seeing a market cap, at least right here, about $939 billion. I think this is a company that will be able to expand that in the coming years. Moving on to Netflix, start of the week at $296. Finally had the pullback, down 12% this week, down to $260, although it's not a bold call when this stock is up 27%. I think I've been calling for it to have a pullback for about 3 weeks now. You'll certainly see this when we get to the technical segment. It is lining up for potentially a buying opportunity. Not a lot of news out of Netflix. Moving on to NVIDIA. This one melted up nicely. Start of the week closer to $137 per share, up 3.25%. To end the week at $141 per share. Not a lot of news out of NVIDIA. They still report their earnings a couple of weeks from now. Moving on to Google, start of the week at $95 per share. This one also down. I mean, we had a bunch of these stocks down 9% to finish the week at $86.58 per share. This one continues to slide as my buddy Sundar Pichai announced on YouTube. You're now going to be able to get primetime channels. This includes subscription services like Showtime, Paramount Plus, and even NBA League Pass. I'd like to actually see them. There's YouTube TV, which some of you might be familiar with. It's basically like a Fubo, if you will, or like a live Hulu. It basically gives you access to NBC, Fox, ESPN. It's essentially a cable bundle. And actually see it's on its own domain. And I'd actually like to see them just roll this all up into YouTube. Moving on to Microsoft, start of the week at $234. This one down about 5.5%. Finished the week at $221.39. This is after we're waiting for Activision Blizzard Q3 earnings. This comes on Monday. Activision Blizzard expected to do about $1.71 billion worth of revenue. That would be down about 9% year over year. But I don't think those sales include really much at all of their new Call of Duty game, which just came out. Those will obviously come kind of in that fiscal fourth quarter. Now, more news on that Activision. I thought this was a really interesting story. Probably flew under the radar for most people, but Microsoft didn't offer any remedy to the European regulators on that Activision deal. And I think there's two ways you could look at this. Okay. So basically, obviously, as you know, Activision is trying to be acquired, or Microsoft's trying to acquire Activision. This was a deal that was consummated in January or early this year, before you saw a lot of price decline in equities. Now, it's obvious at the current time, if Activision Blizzard was its own independent company, probably worth far less than what Microsoft offered for it. Now, here's the interesting thing though. Obviously, this is going through the regulatory process, and the United States, the EU, and maybe other parts of the world actually have to approve this deal. And so part of the process is Microsoft maybe making concessions, saying, hey, we'll sell part of this part of the business, or we'll agree to keep Call of Duty on the PlayStation and the Nintendo, wherever else it already happens to be. We won't make it an Xbox exclusive, which I think some people might be concerned about, or we won't lay off a certain number of employees. There's a number of different concessions that they can actually make, but they actually didn't do anything. I think you can look at this as Microsoft believes they just have such a strong case. They've got these regulators and these politicians in their pockets, and this is all a bluff that they're not going to let this go through. And then after the elections, all of a sudden this gets approved and they acquire Activision. Now, the other thing could be true is that Microsoft knows that they are overpaying for Activision, and the breakup fee, I believe, is right around $3 billion, which Microsoft could just drop on the ground and no shareholder or investor would really notice $3 billion coming off the cash balance sheet. And so it could be that Microsoft is just trying to sabotage this maybe and just play hardball. And look, if they get it on their terms, and they get Activision, and they basically get to do whatever they want with Activision. They don't have to make any concessions to Sony or any other video game maker. Or they force a breakup because it gets denied by the EU or the United States, and then they break up and it doesn't force them to overpay for this asset. I honestly, I don't know which way it's going, but I actually like this strategy for Microsoft. If you are going to overpay for this asset, don't give anything away from a concession standpoint. And if you want to break up with this deal, well, look, $3 billion is nothing for this company. I actually think Microsoft stock would react maybe positively to the news of this deal falling through. Now, Microsoft extended cloud support to the country of Ukraine, worth roughly $100 million. They're doing this free of charge. I'm wondering if they get maybe some kind of tax benefit for this, or maybe some future business from Ukraine if it's able to recover. Moving on to Tesla, start of the week at $228 per share, basically gave back all the gains we had last week. A lot of stocks did this, down 9.3% to end the week closer to $207 per share. This is after we got word of Tesla's China sales as they dropped sequentially, which is month over month, to 71,704 vehicles last month. Tesla China made 83,135 vehicles. Now, last year, the company produced 54,391 vehicles out of Tesla China. So you were up 31% year over year, but again, down sequentially about 13.75%. This is also after Tesla shut down its first showroom in China. We did a story on this one several weeks ago, maybe a month ago, that there were rumors that Tesla was going to shutter some showrooms in China. Tesla, I think, fired back maybe a week later, said that there were no plans to do that, but it does look like maybe this is a fact that they shut down a showroom in an upscale shopping center. It could be that Tesla just doesn't feel the need for these types of things. We also saw when the original story came across that they were actually trying to expand their showrooms in more rural parts of China instead of the very affluent parts of the country. Now, Tesla planning mass production of the Cybertruck by the end of 2023. The truck should go into, quote, early production in the middle of 2023. I believe mass production is something like 20 or 25,000 vehicles. Don't quote me on that, but early production is typically just probably several hundred or several thousand trucks that roll off to the early buyers of these. There's usually some type of event that surrounds that. And then you probably have a little bit of testing phase on those trucks, and then maybe make some small tweaks. And then you ramp up your production heading into the end of the year. Cross your fingers I score one of these trucks sometime next year. Now, Tesla is looking at taking a stake in Glencore last year, but they decided to pass on that. Glencore is a mining company, and they're obviously mining critical materials that go into Tesla's batteries like cobalt, lithium, and nickel. However, Glencore also has a large coal mining business, and so it's perceived that maybe Tesla passed on this because there's obviously some environmental things related to the mining of coal. Moving on to the technical segment of the show, the S&P 500 bounced around this week. It's still, well, I wouldn't say well above, but we're up above an area of support down here that we tagged, I think it was like earlier last week or about 2 weeks ago, right about 3,600. If you stay above 3,600 on this one and you make another move higher, really need to get above these highs at about 3,900. Tell you what, you get a rally early next week in stocks, and again, you could potentially, at least in the very shorter term, be making a series of higher lows, but we are looking for the markets to really break out of this downward channel. I would assume this downward channel, these lower highs, lower lows, is intact until it is not. Moving on to Meta. I mean, this one is, I'll highlight where this one is. It's all the way down here at about $89 per share. This is setting up very similar to Netflix when we get to Netflix technicals. I think in the future, I don't know when, I don't necessarily think maybe at the end of this year, but probably into next year, Meta is going to set up identically to Netflix. The stock has been completely thrown out, I think for a lot of good reasons, but at some point, this valuation of just $243 billion, maybe Mark makes a pivot. Okay, we're all talking about the Fed pivot, but when it comes to Meta, maybe you get a pivot in philosophy and we are not going to spend the majority of cash flows on these goggles and this crazy metaverse, and that certainly would bring investors back to the table. The other thing I guess is possible is the metaverse takes hold and there's more momentum in that space and there's more money flowing through that. That's certainly possible as well. That would create momentum in the stock, but until you see that, this one is going to languish down here at this valuation and these prices, but the soon as you start seeing momentum shift, there's just giant gaps on this one from about 90 all the way up to 120. You can certainly play that momentum as it was proven with Netflix. Moving on to Apple, we'll take out some of these lines. We thought that maybe if this rally could continue, you could come all the way back up here to 172. That kind of crapped out. You're still, I mean, I guess you're still making higher lows on this one. Again, we're looking in a very shorter time frame with all of these things. You could put it maybe like on a monthly view and it gives you a far different view. You're essentially started to go sideways with a lot of these stocks. And this is one of the, there's numerous reasons, but this is another reason why I've been accumulating some of these names, is you're actually seeing more kind of sideways consolidation. Yes, these are giant candles down to like 135 on this one, all the way up to 158, and even kind of higher and lower that over the last 3 months. But this is still basically sideways action since the month of June. And just in my experience, stocks like these that we understand the fundamentals very well of, they're going to go sideways as they start a bottoming formation. And that's kind of my thesis. We'll end up seeing what plays out on that. You do have an area of support down here with Apple at about 137. I tell you what, if you break through this next week with some red action, well, you get into this lower box. This is actually where I'd be excited about Apple. Somewhere south of probably about 125 is where I would be first interested in adding to a position of Apple. Moving on to Amazon. This one hanging out in our green box. This green box is basically kind of a buying zone, anywhere from $80 to $100 per share. If you like Amazon, you like the potential, you like the fact that you've got a $928 billion market cap on this one, and it's still growing, and it certainly can pull the levers when it comes to not hiring as many people, certainly can increase that valuation over time. But in the shorter term, these black downward channel lines, these are intact until you really break up over that. That would be a massive, like we're talking about a 30% move on Amazon upwards until it really broke out of that channel. Now, we've talked about for several weeks after Netflix reported their earnings last week and it gapped up over this $250 range. I said, man, this thing's got to give it back. And that's not a hard call. That's not a brilliant call. But yeah, we finally saw those red candles come up and we're starting to pull back. A back test all the way back to either this green trend line here or all the way back to 250. Not at all something I would be very concerned about. Now, it takes a little bit of stainless steel cojones to step in when a stock is just completely reversed like this one. I mean, it was up here at 298, and I think by next week you're going to reverse down to about 250. That would actually be an interesting spot for me. Although again, there is a likelihood that you slice through that 250 range. You slice through 250, you're probably going to back test to 210. Even if you do that, okay, even if you back test to kind of the low 200s on this one, it's still forming an uptrend. Again, if this pattern kind of stays intact, this is kind of what I'm seeing. This is kind of what I would be predicting with this stock. And certainly what we know from a fundamental basis with Netflix, if their ad business and their other things that they're trying to do take form, well, it certainly is possible. Moving on to NVIDIA, this one's showing some strength, okay? It busted up over, there's an area of resistance. It turns, now it's turning into support at here at 128. We're pretty far above that, up here about 140 on this one. However, this stock has done this numerous times. It's kind of peeked its head over a very tight channel range. We would expect pretty soon, probably as early as next week, this one reverses course, comes back down to the bottom of the channel. If it doesn't do that, if the momentum stays in this one, that is a very, very, very good sign, but you still would want to get this one up over about the previous highs here. You still got to get up over $180 per share. And just what's the path of least resistance for NVIDIA? Is it going up another $40, which would be a complete trend reversal in these markets, which seems a little improbable? Or is it just to retest the lows that you made back here in October, down here at about 113, maybe even $100 per share? Tell you what, there's $40 risk reward either way on this one. So I'd probably still stay out of that one until we get a little bit more clarity. Moving on to Google, this one is just completely dumped out the bottom. It's possible. What I hate doing is like moving trend lines to like fit the narrative, but I guess that could be happening now. But look, Google's trend was real. The channel was really here, and we're well down below. This is a buying opportunity if you like this type of stock. You've got a $1.12 trillion market cap on this one. You get any kind of tailwinds when it comes to the online business. You also have their number one competitor in terms of online ads has completely taken their eye off the ball of online advertising, which I'm referring to Meta, and so certainly could create some opportunities for Google. Moving on to Microsoft, this one's sitting on the bottom of the channel. This is a place to buy this one. Wouldn't surprise me if, again, you get momentum in these markets, you retest up here in, north of maybe 250, as high as 250 on this one. But in order to reverse this trend, you still need to get above this like 270, 280 mark on this one. So what's the path of least resistance for Microsoft? Is it to go up another 60 or just continuing kind of languish down and get back down to maybe $200 per share? Seems like the path of least resistance is probably still down on this one. That's why continuing to accumulate at these prices, I think, is a wise move, but you don't need to be super aggressive with your accumulation. If all you have is $1,000 for the rest of the year, you can very, very much inch into these things. Moving on to Tesla, this one's hanging on a cliff. I mean, this one's been here before. It was here basically over the last month or so, hanging on a cliff. You break down below anything meaningfully down, probably, I would say probably south of 200 on this one. And yeah, you're coming down big on Tesla, probably down into the 130s, 140s. And look, on a $650 billion market cap company that still has an exceptional growth rate, exceptional profit margins, I'd be excited you get a stock like this to make that type of move. I think that would be a very, very nice thing. The other option is we find some footing here, we move higher, retest areas up here above probably 275 on this one. I actually would take profits if you moved higher than 275. I'm a little bit different than a lot of the perma Tesla bulls. While I don't sell my entire position, I tend to take profits on this type of stock. Certainly NVIDIA, I've taken profits on in the past. There's really only a few stocks that I actually just buy and hold, and I ride out the downtimes. Tesla would not be one of them, just based on the volatility. The stock, and I'm not breaking any news here, swings 40, 50% very routinely. And so when I get those large swings up, I do like to take profits, but again, you make those decisions on your own. Certainly, if you would have bought and hold Tesla for any length of time, you are up a very considerable amount in the longer term. Hopefully, guys, enjoyed today's video. Be safe this weekend. Enjoy it, and we'll see you again next week. Good luck with your investments.